Hey, what's happening? What's going on, everybody? My name is Matthew. In case you don't know who I am, uh, I run this YouTube channel where we talk about day trading futures as well as a little bit of crypto. If that's something that interests you and you want to learn more, just go ahead and subscribe because we come out with videos all the time, and I'm glad that you're here with me. So in today's video, I'm going to be talking about why I'm still trading futures even though Bitcoin and the crypto markets have been on a bullish run, right? So let's go ahead and dive into the video. So I do want to clarify one thing right off the bat. That is that I do still own crypto, and I do trade it a little bit. I just am not focused. I'm not solely trading it like I was in this past summer, right? So summer of 2018, I was exclusively trading crypto. That is not the case anymore. Uh, about basically the beginning of 2019, I switched over to futures and have been really cranking that on a day-to-day basis, and then kind of swing trading crypto a little bit. I do swing trade crypto using basically just this trending indicator that I have. It's for sale in the first link down below. But let's go ahead and dive into kind of the more sole purpose of this video, right? So I'm going to pull up something called the ATR, which is the average true range. You'll see it right down here below. And so what the ATR is it is the amount that the asset that you have on the graph moves per that time frame, right? So right now I'm looking at the daily chart, so that means that right now, on average, it's moving about $538 a day, and that's due to these big spikes getting thrown into the average, right? At one of its lowest points recently, it was moving 90-ish, $70 to $90 a day, right? So if we look at this time, at this given time, let's see, $80 a day, right? So let's just see how much $80 a day was. So that is 80 bucks a day, right? 70 bucks. So around 1.73%. You'd have to be very, very leveraged in order to see any type of gain. You would need to be on a platform like BitMEX, which just brings its own risk, and maybe you're not even allowed to be on BitMEX where you are. But this is an easy way to see kind of how much an asset is moving every day, right? So now if we go over to the NASDAQ, which is what I predominantly trade every day, the NQ1, let me just go ahead and actually, I'll leave all that crap on the graph for right now. Anywhere from 210 to 70 bucks a day, right? So about the same as Bitcoin, but when you do a comparison, 70 points on the NASDAQ, so let's just call it 80 points, it's about where it's at, 80 points on the NASDAQ for one contract. So for one contract, so the intraday margins on, say, NinjaTrader is $500 for one contract. That means that if you have one contract move 10 points, you would have made $200. So it's $20 a point move for the NASDAQ. So if I have something that moves 80 points in one day for one contract, that is, what, 1,600 bucks? I think that's right. Yeah. Or 800 bucks. So yeah, 1,600 bucks, right? So every 10 points is $200. So you can do the math there. So that's like the total potential gain of using futures just off one contract, which is deemed as fairly low risk, fairly low barrier to entry. When you're having to do that same type of move in order to see $1,600 in crypto, you're going to have to be very highly over leveraged. You're going to have to be kind of flirting with the potential of having these, like, I forget what they call them, but I haven't been on BitMEX in so long, but where you can't even like put your orders through because it's over, like they have too many orders, it's overloaded, I think is what they call it. And you would just have to be using a lot more capital, right? So that's why I'm using futures. The daily gains are consistent. So on the low, that's $1,600 worth of movements per one contract. Obviously on the high, that's insane, right? So 220 times 20, whatever that is, just one contract of movement The other thing is that futures are just a little more reliable, in my opinion, more regulated, more reliable. I'm wanting to take day trading full time, right? So I want to be in something, I want to be in an asset class that's not going to screw me. I want to either be screwed by trading or something. I don't want to be screwed by the other factors other than the trading, right? So if you're trading Forex, crypto, futures, stocks, I do recommend just pulling up the ATR. You don't even need to keep it on there. I just do it every now and then. Um, just this is a good tool for you, the viewer, to know about that if you're wanting to see how much something is moving every day, pull up the ATR and just find the point that you're curious about, and then look over on the right axis and it'll tell you what the average move for that day was. So that's why I'm still trading futures. For me, it's a better option. I see more gains. I mean, you can multiply everything that we just talked about, multiply that times the amount of contracts you're using. So if you want to do like a side-by-side comparison for your own self of using $1,500 in crypto at whatever leverage you're comfortable with, and just do the math on that, and then $1,500 in futures, which would be 3 contracts, you can just like figure out which one is a better deal for you with your risk parameters, right? So maybe do 2 contracts, which is $1,000 you put in, and you're able to make $3,200 if you catch every bit of the move, which is obviously not likely, but it's moving 80 points a day, right, on average. So you're gonna have opportunities to pull money out of that, and then do the same with Bitcoin and see what's better for you. So that's just something that I've done personally. Futures is it for me, and I hope this was interesting. If it was, and if you found value in it, please go ahead and smash that like button. I appreciate it. And go ahead and subscribe to this channel. I also appreciate that. And I will see you in the next video. Peace.